Good morning, everyone, and welcome to Morning Markets from True Potential. Today, what we'll discuss is just look back at last week, some of the trends there from asset markets, and then focus in on the week ahead, some of those data points that we'll be looking forward to. So, a positive week last week for equity markets, a number of those equity markets hitting all-time highs. Majority of regions continue to see good performance. If we look at Europe, UK, we look at the US as well. A little bit of a slightly divergence from that trend was what we saw in Asia last week. That was primarily due to weakness in the Chinese equity market over the week. If we look at then, thinking about it from a style perspective, we probably did see, in the main, growth outperformed value over the course of the week, marking a slight different trend than that which we've seen over the past number of months. Also looking within sector levels, a little bit of a nuance there, just given what was happening in the bond market, and I'll come on and touch that in a moment. Bond market did support growth. It also supported some of those sectors more sensitive to rates. So interesting to see. In the US, at least last week, utilities one of the best performing sectors. We also touched on the market backdrop last week in terms of the results season. We started with the results from the major banks in the US, reporting very good results over the period for what had occurred in the first quarter of 2021. Interesting that share price reaction was mostly negative for the banks after they reported. Really, I think a bit of the market focusing in on the core part of those banks and what is it that drives earnings growth over the medium to longer term. It's that which is related to lending activity that the banks can make. And lending was pretty anemic for most of the banks. And that's understandable given the backdrop of improving economic environment, but also the high levels of savings that are there. So something to watch over the coming months. But just looking at overall expectations for the first quarter, US earnings are expected to be up some 30% year on year. Only a matter of weeks ago it was 25%. The start of the year it was around 15-16%. So that gives you an indication of the momentum that there is in earnings and in that recovery theme. Looking at sovereign bond markets then over the week, what did we see? We saw the treasuries really in the US and globally we saw them coming in. So over the course of the week, the US 10-year came in 9-10 basis points, ending the week at around 1.57. Really, the performance of the bond market in the face of that strong economic data that we touched on last week was a little bit surprising, but a number of factors that appear now to be at work there in terms of market positioning, foreign buyers given the yield pickup that they can find, and then last week we touched on the auctions, 3 auctions that were very well received as well. Just looking at some of the other asset markets briefly, currency markets broadly. What did we see last week? Dollar a bit weaker over the course of the week, marking a bit of a turn from the trend that we saw in the first quarter. Commodity markets really primarily about oil. We saw oil up around 6% last week. We touched on some of those issues, revised forecasts in terms of demand from the IEA and OPEC, and also just the demand environment, the strength of that economic data supporting the oil price. Focusing then the week ahead, what are we looking for? Well, continuation of results, and I think results are going to be really important as we go through the next couple of weeks, and really that's because it's going to give us a sense of how businesses are thinking about the months ahead, their operating environment, the guidance that they can give around that. So focusing in on that, focusing in also on any comments that they're making around cost pressures, inflation, feeding back to that theme that we've been discussing over the past number of months. From an economic perspective then, we have a number of flash PMI readings, which again across the globe will be really useful to get a sense of how there is or is not divergence in terms of the recovery globally. Will it be sufficient to really highlight further the divergence between the strength that we're seeing in the US, the weaker environment in Europe? We'll discuss that as we move through the week. Europe, this week we have the ECB meeting, and no change is expected from a policy perspective. If we remember last month, they accelerated the speed of their quantitative easing or bond buying program. So comments around the success of that, and also how the ECB is assessing the current economic environment will be important. Closer to home, we've a lot of data primarily coming out tomorrow, and that'll focus in on employment, retail sales, wage growth, etc. So that'll be a core focus for us tomorrow. And then just overnight in Asia, Japan, good export data, very strong exports. Japan is tied into the global trade, global manufacturing sector. So strong evidence of that ongoing improvement there, albeit a little bit of a slowdown in terms of industrial production that we saw. And then just in the UK this morning, we've had the Rightmove house price index, which was up about 2.1% month on month for April. I'll leave it there for today, but please do subscribe on our YouTube channel. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.